Jim Rogers. Sounds alarm. Legendary investor. Dumps U.S. stocks. Warns of impending market storm Singapore. Current date. Renowned investor. Jim Rogers, co-founder of the Quantum Fund with George Soros, has revealed he has sold nearly all his holdings in the U.S. stock market. Citing deep concerns over current market conditions that he likens to historical bubbles, Rogers is urging investors to exercise extreme caution as he anticipates significant turbulence ahead. Rogers' move comes amidst a global economic landscape fraught with uncertainty. He openly expresses his worry about the U.S. being the world's largest debtor nation, a situation he finds particularly alarming. While acknowledging the current positive economic data, he emphasizes that historical patterns often see markets peak during periods of apparent strength, making him increasingly uneasy. "I've seen these parties before," Rogers states, referring to the recent rallies in the S&P 500 and Nasdaq, which have not swayed his decision to divest from U.S. equities. Trade wars and global shifts, a complex web on the contentious issue of tariffs. Rogers is unequivocal. Tariffs are generally bad and do not work in the long run. He highlights that consumers ultimately bear the cost of these trade barriers. Regarding the ongoing U.S.-China trade negotiations, he notes the current 90-day truce and China's characteristic patience, suggesting they may not rush into an agreement. Rogers also cast his gaze on the broader Asian economies. He points to a slowdown in China's economy, partly attributed to a significant real estate bubble within the country. Conversely, he expresses optimism about India's economic rise, stating that for the first time, he feels the government in Delhi genuinely understands economics. Despite this positive outlook, he admits to missing out on the current Indian surge, having no present investments there. Navigating uncertainty. Cash, gold, silver, and the dollar in. His current investment strategy, Rogers reveals he is holding a substantial amount of cash. He continues to invest in gold and silver, finding silver particularly attractive. His preference lies in acquiring physical precious metals, steering clear of mining stocks due to the extensive research required. When it comes to the U.S. dollar, Rogers holds a fascinating, somewhat contradictory view. While he believes the dollar will depreciate in the long term, he anticipates another short-term rally. During this rally, he plans to sell his dollar holdings. However, he admits to a significant concern, not yet knowing where to allocate the funds after selling dollars, though he sees the Chinese yuan as a potential future alternative once it becomes fully convertible. Rogers also cautions against the high level of speculation in the current market, a phenomenon that historically leads to adverse outcomes. The frequent use of the word uncertainty in recent Federal Reserve meetings further exacerbates his worries. He also forecasts that interest rates will continue to rise, and inflation worldwide is far from over. A cautionary tale from a global's nomad beyond the financial markets, Rogers shares glimpses of his adventurous spirit, recalling his motorcycle journeys across 116 countries in 1999 and 2001. Growing up in a small town, his desire to see the world shaped his perspective, perhaps contributing to his pragmatic and often contrarian financial views. His overarching message to investors in these crazy times is simple: be extremely careful. He urges caution, advises against excessive optimism, and wishes everyone prosperity, but always with a strong emphasis on prudence.